Good afternoon and welcome to today's session on impact of interest rates hike on property loan and effective solutions. I am Prasanna, co-host of the event today. Let me introduce today's presenter, Mr. Sunish Shah. Mr. Sunish is Managing Director at Fund Flow Consultancy Private Limited and Fund Flow Services Private Limited. He's an astute finance professional having 25 plus years of experience in financial planning, fundraise, and financial management. Mr. Sunish embarked on his professional journey with a solid foundation in mechanical engineering, graduating in 1994. His pursuit to knowledge led him to acquire a postgraduate diploma in business administration, marketing from ICFI Business School, complemented by achieving the esteemed Chartered Financial Analyst (CFA) designation in the same year. He contributed his knowledge and capabilities to Tata Finance and Cholamandalam Investment and Finance, to name a few. With a wealth of experience in managing and raising funds for more than 10,000 plus clients, he and his companies have made a substantial impact on the financial landscape. Mr. Sunish's dedication to excellence, transparent business practices, and personalized services has gained him the trust and loyalty of numerous satisfied clients. As a visionary with a diverse skill set, a commitment to learning, and a vision for future, Sunish Shah stands as a testament to the potential for transformation and success in the world of finance. This webinar is specially designed for business owners and working professionals. During this session, he will update you on interest rate policy, impact on property loan, example calculations, and possible solutions. If you have any questions while you attend this session, kindly write in the question and answer tab in the bottom of your Zoom login. He will take up the question at the end of the session. Alternatively, in case you want to ask any question in the end of the session, you may please raise your hand. We shall activate your microphone to ask the question. Sunish sir, can you please take it ahead from here?
Yeah, thank you, Prasanna, for a lovely introduction. I welcome all the attendees on behalf of United SME, my company Fund Flow Consultancy, and myself. And I thank them for taking their time to listen to this topic. As I said, as Prasanna said, the impact of interest rate on the SMEs and professional, it has a major effect. Generally, we think what will affect us or what can we do when the interest rate is changed by RBI. If you see, I'll just share my screen before. So is my screen visible? Yep. Okay. See, interest rate can affect everybody's balance sheet. It's like a termite. If it is not taken care properly, it can destroy the entire balance sheet. And people take why at this point we need to understand the interest rate hike when it is already been increasing last 1.5 years and RBI has already paused it. The interest rate effect is very, very crucial on anybody's balance sheet, whether you have already borrowed or you are planning to borrow. It has a different impact. And how? As interest rate is a tool by the Reserve Bank of India to manage the cash flow in the market. When they change based on their perception of the market, we need to take our stance. So they may increase when they think they need to withdraw the cash from the market. They will increase. When the cash withdrawal happens, our plans for our expansion, our plans for our borrowing, and our impact on what we have already borrowed, we need to take a stance. When they want to increase the cash flow, that means they want to give booster to the economy, then they will reduce the interest rate. In that position, we need to plan how we plan things and what are our scenarios. To understand it currently, why we have taken this, I'll start from increasing interest rate and how it will impact our things. But before that, I will ask Prasanna to launch the first poll of the day.
Thank you everyone for attending this poll. As I have mentioned earlier, the session was for SME owners and working professionals. So 60% working professional and 40% SME owners. It's a very relevant crowd. Thank you, sir. You can take it ahead.
Yeah. Okay. Okay. So, since there are working professional and SME, I'll take this from the both the point of view. There are two kind of interest rate which are offered by most of the financial institute. One is a floating rate of interest, other is a fixed rate of interest. As Reserve Bank of India takes their decision based on the economic condition, none of the financial institution is in a position to offer a floating rate, a fixed rate of interest for a long-term duration loans. That means people can predict what will happen to the economy for next 2, 3, 4 years, but they cannot predict what will happen in an economy for next 20 years. So they cannot commit a fixed rate of interest because they think that if the interest is against their favor, they will incur huge loss. But reverse is a true also for the borrower. Since we cannot predict, we also give when we need to borrow for a long term, we give an authority to the bank and we borrow at a floating rate of interest. So generally the car loans and small loans, which are for 3 years, are on fixed rate. In a fixed rate, even the changes in the rate by Reserve Bank of India does not affect. But as far as floating rate is concerned, if you understand, when you have borrowed, you have given an authority to a bank to change the interest rate based on the change in interest rate for borrowing by them from Reserve Bank of India. 5 years down before, this interest rate was being decided by each bank on their own cost. Means when the rate were increasing, they were fast enough to increase the rate for a customer. But when the rate was decreasing, they have got n number of reasons not to reduce the rate for them. Looking that in scenario, Reserve Bank of India came up with an idea. No, because of every bank cannot work on their whims and fancies, they decided one rate, which is a repo rate, and every floating rate for a bank should be pegged on those repo rate. So increase of the amount of that repo rate should be increased when the rate increases and should be reduced when it reduces. But banks cannot do this on the same day. So then there were some policies which are designed. The rates are changed on every quarter by a bank based on the repo rate which has been decided by a bank during that period. So when Reserve Bank of India increases the rate in a next readjustment cycle, rate will change. If you see the effect, you will get a newspaper articles that, okay, Reserve Bank of India has increased the repo rate by 0.5, 0.25, whatever, or reduce. Those are headlines. And then you always used to see a calculation that EMI has gone up by this percentage or MI has gone up by this percentage. But nobody is giving you an exact idea what will impact to a person who has already borrowed or who is planning to borrow. So here I am trying to explain the scenarios, what has happened. From March 2022, when repo rate by Reserve Bank of India at the rate which bank borrow from Reserve Bank of India was at 4%. So all long-term loans, whether it is a term loan or a home loan or a mortgage loan, were available at a repo rate of 4% plus a margin of 3 to 5%. So if it is a home loan, it was varying from 6.5% to 7.5%, and mortgage loans were offered at 9%. In this last 1.5 years, means one full year balance sheet plus 6 months, because I'm talking about most of you must have filed your income tax return. So you know what is the rate, total interest you have paid. Now see, they have increased the repo rate by 2.5% in last 18 months. So from 4%, it has gone to 6%. So everybody thinks my loan has gone to 8.5%, 9%. But if you see in a different point of view, the repo rate has increased by 62%, from 4% to 6.5%. So overall, your interest payment has gone up in a home loan by at least 35% and mortgage loan by at least 25%. I'll explain it again. If somebody has a question, you can ask me at this point. Means what you used to pay at 6.5%, 7%, now you'll be paying at 8.5%, 9%, or even 10%. Your business has not grown, or your salary has not grown at that rate. It must have grown by 10%, but your interest payment has gone up by 25 to 30%. Now, if you see anybody's balance sheet, the interest is a major component, and that major component has increased by 25%. So either we need to increase our business or increase our margin, but margins are not going to increase that way. So we need to control our cost, or we need to control our borrowing. So the total borrowing cost, because of the rate of interest change, people now should understand that this year you are going to pay by not borrowing anything extra. Interest component will be 25% higher on your last year's borrowing. When you pay higher, your profitability goes down. When your profitability goes down, your affordability goes down. At the same time, Reserve Bank of India is or banks are in a position that they cannot burden people by increasing the same amount or in EMI. So they keep the EMI same. In that process, the loan gets longer for a longer period. Means your 15-year loan will be extended to 22-year loan, 23-year loan, or 25-year loan. I'll just give you my personal example. I purchased a loan office worth 1 crore of rupee and taken a loan of 60 lakhs of rupees in the month of March 2022 for the period of 180 months. Today, after paying 18 installments, since my interest rate has gone up by 2.5%, my remaining period of loan is 240 months. Means after paying 1.5 years, I am still going to pay for next 20 years. Instead of total 15 years of payment, my total payment has gone to 258 months. Though it is going to reduce, the bank is going to reduce the interest rate over a period of time, but technically speaking, today whatever interest I have paid extra is gone. So basically, if I need to plan my next purchase, or if I need to plan my next loans, I need to have a clarity when the next current loan are going to finish, but it has been extended. So it actually affects my next planning. It affects my total affordability. Since the interest component is high, because the interest rate is higher, my principal payment per installment goes down. When my principal payment per installment goes down, whenever the new loan application are being processed, they will see that my major income is going towards interest. So whatever the LTV will have will be reduced, because the total bank exposure which can be taken based on the income, major portion is being coming into these installments. Now, these are the process, these are the effects which will have on a current loan. So now what will happen to the real estate industry? Because real estate purchase is the biggest purchase by anybody in transaction terms. So let's say we buy a lot of things, sell a lot of things, but the real estate, the value of the transaction is very high. Value of the transaction is very high. So generally the component of loan is very high. Now what happens? Let's say a crore of rupee loan at a 6.5%. Your eligibility, let's say somebody is earning a lakh of rupee a month, and bank calculates that, okay, you pay 65,000 rupees installment and you need to keep 35,000 rupees for your day-to-day expenses. So your 65,000 is fixed. Initially, for a rate of 6.5%, you could borrow 80 lakhs of rupees. Now, you can only borrow 65 lakhs of rupees because your installment has gone up because of the interest has gone up. In this process, you need to take out more money. Like initially, you need to take out from in a crore of rupee property, 80 lakhs is a loan. So you get 20%, 20 lakhs as an amount. Now you need to take out 35 lakhs. That means your down payment component is gone up. In this process, generally the savings are not increased over a period of time. So you have to either defer your decision. When you defer a decision means real estate transaction will reduce. Probably there will be a pressure on the prices or your negotiation power. But there are resale also will happen because people will not be able to afford the current loans EMI and they need to downsize their borrowing either by paying the loan or by getting rid of the property. So there are chances that people who own multiple properties may try to get rid of property. For a small business, since I said the interest rate is major component in our business, and because of the interest rate has gone up, our profitability will effectively go down. Because what happens is here, the banks have taken this decision to reduce the, to increase the interest rate, to reduce the cash flow from the market. That means they want to tighten the economy. When they want to tighten the economy, everybody have an impact on their cash flow. So because of the impact on the cash flow, the business growth will reduce. And when business growth will reduce and your interest rate component has gone up, it has a double impact on anybody and everybody in their business profitability. Since this has affected your balance sheet this year, when you try to go and borrow the next year, your profitability and cash flow has reduced. You need to have a understanding that your eligibility in next loans will again go reduced. And since the market, the interest rate has tightened, real estate industry, there are more sellers and more desperate sellers, though probably there will be a stagnancy in the market. Prasanna, I would like to raise a next poll if you can. Yeah.
As you all can see the results on the screen, the question is, have you experienced any of the following? So extension of EMI tenure or increase in the EMI amount 71%, increased cost of living 57%, and increased overheads and working capital requirement 29%. Thank you. So please take it ahead.
So what I actually gave you an idea what will be an impact on you. Generally, this was from your business point of view, but as India is a saving economy and everybody goes towards saving, you will have an impact on your other income also. Like stock market will not perform well or mutual fund will not give you good returns. What will happen is basically interest rate hike is by the authority to control the excess cash flow from the market. When they withdraw the excess cash flow from the market, as property market requires the highest cash flow, it is having more seller than a buyer. Even in the stock and other places, people will withdraw money because they need to manage their day-to-day things. They need to manage their other expenses. So the additional investment will be withdrawn. So there will be more supply than a demand on the sale side because everybody is having some kind of cash flow problems. So there will be a negative returns even in the other markets. Yes, but now the banks also have started changing their deposit rates with the repo rate, but it is not floating, it is always fixed. So, and banks are always slow in changing those rates. So there are instances where people have done the fixed deposit in year 2021, and just 3 months after that, then those deposits for 1 year, 2 year or 3 year period. But just 3 years after that, if you withdraw the deposit and reinvest it, people were getting more money overall. So you need to understand whatever you have done in a fixed deposit a year back or a year and a half back, where the rate were 4, 4.5 or a 5%, now it can go up to 7, 7.5%. This is probably a good time for people who are going for a fixed rate of fixed interest income and very safe interest income to relocate at your bank deposits, probably calculate the loss of early maturity and against which the change of difference of interest rate benefit. So it is a time to recheck, recalculate and do things. As the cash flow is reduced and everybody is going towards the scarcity of cash flow, the consumption will reduce and capital investment is the same thing which I've already spoken into the real estate part. Everybody, because we are not, it is the tool to break the, apply the brake on the economy. So country's economy will have a slight issue because of which the currency also will have an issue. Government also, when they borrow from the market, they also borrow from the market at a rate which is very near to the market rate. Definitely, Reserve Bank of India will also, when they increase the repo rate, they also increase the reverse repo rate. Generally, it is 25 basis point difference. So those banks and those financial institutions, they have additional money. They will also lend to the government and Reserve Bank of India at a slightly higher rate. So they also have a higher fiscal deficit. Basically, this point of inflationary pressure is already been created and the authority need to reduce that inflationary pressure. So they have to change the interest rate. And it's a tool to slower demand. So what I'm trying to say is banks and Reserve Bank of India, when they change interest rate for the benefit of the general public to impact the inflation reduction or impact on a day-to-day small things cost. When that happens for us, so those who have plans for expansion, those who have already expanded, need to take a corrective action. Basically, those who have already borrowed means you have given your authority to the bank to change the interest rate when the Reserve Bank of India changes the interest rate. Here, because of the inflationary pressure and other issues, Reserve Bank of India has increased the rate of interest by 2.5%. That means you have started paying higher interest rate over a period of last 1.5 years. That means your planning, which was there in March 2022, will go for us haywire. The reason is nobody has anticipated sudden speed of increase. And this probably will be continued for some longer period of time because of the world market. Generally, the Reserve Bank of India action is linked to the Indian economy and movement by other banks across the world. It is not possible that Reserve Bank of India will move in one direction for a change of interest rate and the American, Japanese and other bank will move in the other direction. So world over, the situation because of the current war of Ukraine and Russia and new development happening between Israel and Hamas, and then the impact on crude. Since if the crude price will go up, there will be an inflationary pressure. Inflationary pressure because the crude has cost, associated cost for every commodity and every other thing. As this inflationary pressure is going to continue and the way other world economy are performing, I do not foresee a rate of interest reduction in next 12 months. Means we are going to pay the same interest rate or maybe a 25 or a 50 basis point higher interest rate in coming 12 months. Then if things stabilize, the economy of the world start performing slightly better, we might have a reduction in interest rate, but it will also be slowly and gradually. Because of Corona effect in 2020, Reserve Bank of India has given a lot of benefit in terms of interest rate. Now it is a payback time for us. But when we have to pay back, we need to have a positive stance or we need to have a stance in such a way that our day-to-day life is not affected or our plannings are that we do not meet with an accident of miscalculation. Prasanna, that's it from me for this slide. Now you can pull the you can float the next poll.
Thank you everyone for participating in the poll about impact of rate hike. So 38% delay in payment receipt from market, 63% stagnancy for property returns, 38% increased rental or commercial or residential property, 38% increase of raw material costs. Thank you. Sir, would you like to shed more light on this?
See what happens is I'll tell you about the first point, which is the delay in payment receipt from the market. It is actually bound to happen because if you see in a business, when government has started withdrawing flow of cash from the market, means everybody is cash tight. In that situation, we need to have a proper calculation about our costing and our pricing. And in that situation, we need not lend extensively because we also will be incurring higher cost of interest from our borrowings. So that is actually bound to happen because people always think that I might stop some payment for my supplier before I need to withdraw from my investments. So this is going to happen. So we have to be careful while lending. There will be some default also because I'll tell you a classic default and interest rate hike issue in the Indian economy is Kingfisher Airlines. I'll just share that small example. They had a borrowing of 900 crores when they launched the airline in 2006. If you see any airline, the initial portion is investments. So they kept on investing and designing a product. Before they stabilized, that was Lehman Brothers crisis in 2008. The rate of interest which they used to borrow around 9% has gone to 14%. So they kept on, since they have already invested a huge amount in the business, they did not have an option but to borrow more to continue their operations. And their borrowing went up to 14,000 crores, sorry, 8,000 crores to 14,000 crores. And the investment has gone to 14% rate of interest. As the market was not doing well, your borrowing cost has gone up. They did not have any option but to either borrow more or default. Till the time they could borrow more, they borrowed. And the moment their cash flow stopped, they defaulted because the business became unviable. That was at a very big scale. That was actually manageable by a businessman, but they could not manage it in a right way, so they defaulted. The similar situation can happen to any industry because everybody has a limited capacity to borrow and limited capacity to manage. So we need to take a corrective actions before the catastrophe happens to us. So I'll just be discussing the impact of this interest rate now, what we can do about it. So basically, when the interest rate is going up, that means the borrowing capacity of most of the people will go down. If you see that position, banks will also get lesser business because they will have a tighter norms to lend, and they will also have less customer coming to them because less transactions are happening. This gives an opportunity for a good borrower or a people who have already borrowed to negotiate with the same bank or go to the other bank with the track record which you have to negotiate a better rate of interest and transfer the loan to that amount or restructure the loan to the same bank. I will repeat. Every problem is also giving you a solution. When the interest rate has gone up, means you are losing money faster. In that situation, most of the people are in same situation. So as a smart borrower, we have to sense an opportunity that everybody is not in a position to borrow, means the lenders will have a problem, lenders will have a less business, so they will have more desperation to lend. In that process, they cannot oversee or forego their conditions to lend. So since you are a good borrower and you are still paying good installment on time, you're still doing good business, you need to go back to your own bank and say, look, my interest rate has gone up this much, somebody is offering me much lower, would you like to reduce, or I may opt for somebody else. In this process, most of the time bank will negotiate and come down at a rate of interest, or there are other bankers based on your track record, based on your market standing, based on your documents, will give you. So this will probably give you some benefit in terms of rate. So money saved is money earned. Currently, after 2.5% of increase in interest rate, we could manage 0.75 to 1% rate reduction for our customers in last 6 months. That means the impact of 2.5% reduced to 1.5%. I say it is a 40% saving in the increased interest rate. This is basically not borrowing extra, just readjusting your loans or readjusting your borrower, your lender. Means आप इस बैंक को पेमेंट दे रहे थे वो दूसरी बैंक को दोगे, इंटरेस्ट वही है, नोट वही है, पैसे वही है, पर आपको सेविंग करना है. The second possible option is hedging. Many times you need to shift your business loan to a property loan. What happens is customers are sometimes reluctant to borrow on the home. They say that is the property which I don't want to risk. But if you have borrowed even unsecured at a higher rate of interest, you have already given your personal guarantees. So you may have to look at your borrowing principles, and you need to swap your loans between the higher rate loans to a lower rate loans, or a more unsecured loan to a secured loan. That's where you can save your outflows. You need to diversify your cash flow. Means if you are, let's say, earning good today, but if you see a market economic situation which is very bad, or probably you foresee that the way I foresee is next 1 year or even 1.5 years will be a similar economic situation, I need to stop my expansion plan, or I need to restructure my expansion plan, or I need to go to my dashboard and understand how other options which I can have to fund those projects. Because with the higher cost of interest on the initial stage of any loan is very difficult. Basically, we need to understand our asset liability also. What I mean to say is asset liability management. Generally, most of the organization and most of the people have a problem for not meeting the asset liability payment timings. I'll just explain you in a detail this so that people can take. Generally, people borrow short for a longer term asset, or borrow long for a short term asset. And when the repayments are there not matching with the income, there are chances of default. Small example, let's say person going for a loan was planning to go for a loan of a 1 crore rupee. And he has taken 6 months and the rate of interest has gone up like this. So a crore of rupee loan initial eligibility was 80 lakhs and the reduced eligibility was 70 lakhs. Now there are two options. He decided not to buy this property. The second option, he decided to buy this property but manage this difference of 10 lakhs rupees of money through other source of income, the other source of borrowing. So he goes to his uncle and say, give me this 10 lakhs of rupees, I'll give you in some time because I need to buy the house. Or he goes to a friend and borrow this 10 lakhs rupees or 5 lakhs rupees from couple of people. Now, the transaction is done and the money is locked. The friend comes after 3 months and say, hey, I have given you this 10 lakhs of rupees. Can you give me 5 now? Is possible. That means you need to get this money from somewhere. So for a long-term investment, you have borrowed short-term. When you have borrowed short-term, that's on-demand money, and on-demand money, if you don't give, you either spoil your relation or you default, or a lot of things can happen. Your relation can spoil. Let's say a reverse example. Let's say I see a business opportunity for a transaction where I'm going to make 5 lakhs of rupees for next 6 months, because it's a recurring transaction for supply for next 6 months, and I'll make 5 lakhs of rupees. And for which I require a working capital for a crore of rupee. My CC limit is already utilized. And there's an additional opportunity other than my business. So I go and decide and I buy a lowest rate of interest, which is a mortgage loan. And that is for 15 years with lock in period of 2 years and with the foreclosure charges of 3%. Now what happens in 6 months, whatever the income extra I have got 5% a month, that has stopped after 6, 7, 8 months. And I need to repay my loan for next 10 years. Let's say after 2 years, my lock-in is over and I go and prepay, which is another 2%. That means I have paid an extra interest. So my cash flow is not properly utilized. In banking parlance, this is called asset liability mismatch. We need to look at our cash flow, our business, our things, how we are going to earn, how we are going to pay. And we need to make the timings in such a way that we do not lose things like this. So basically, we need to work on asset liability management in every situation, whether it's an interest rate hike, interest rate reduction, or a standard thing. These are the major reasons of default. People say, I have got a lot of assets, but I can't pay you few 100,000 rupees because I do not have a cash flow. So we need to plan our cash flow through this asset liability management and liquidity planning. To do that, as a business owner, or even a salaried person, we need to understand the scenarios. Let's say for a business owner, how the market is going to behave, how the stock market is going to behave, how my investment is going to behave in mutual funds and all, and how my market is in a trend. Let's say telecom industry was a boom industry for first 5 years, and suddenly because of competition, everything has gone down. So everybody's cash flow has gone for a toss. So we need to see, at least as a small business owner, how things are going to happen for next 2 years. Are we going to have a demand, or are we going to looking for a stagnation? Like excess supply will also have an impact. If you see currently around every place, there is a huge supply of lot of things which is coming. So let's say shops or construction or retail, or people are expanding their business. That means they see a huge demand, but we need to understand from our industry what kind of business which will be generated. Things planning has to be done. Are we going to, so when we design our next year's plan, we need to understand if the rate of interest increase by 1%, how it is going to impact my balance sheet. Let's say it is going to increase by 2%. Do I need to increase my business, or will I have an impact on my pricing, or will I have an impact on my cost? As people have mentioned, the higher material cost. So we need to take those understanding in expansion and also while taking the loan. People take the loan based on their requirement. I say don't take the loan only based on your requirement. Or people go and decide the lowest interest rate from the market. No, it's not. You have to choose the right interest rate, matching your repayment timings. And based on scenario, you have to decide how you borrow. There are certain government programs which you need to take care of, and which you need to. Their classic government program which had come last time was at the time of Corona. It was given a moratorium by the government because of the liquidity crisis which has happened in the market, or business crisis which happened. People were reluctant to work on those things, and people paid interest and people paid the installment and affected they were majorly affected by the total cash flow after that. Actually, you should have opted for it. So you have to look at what government programs, what government subsidies, what government benefits are coming in my business, or let's say some benefit coming from salary from their employer. You need to look at it, understand the impact of it, and try to opt for it. And for doing this, probably what happens in a SME, what we have seen in my last 23 years of experience is like this. Most of the SME owners are technocrat. They are thorough in their business. They are technically thorough in their industry and manages everything on their own. They take an help of an accountant. In a 10 to 15 crore, 30 crore turnover industry, the accountants are basically a data entry expert, but do not have any expertise and financial understanding. In this scenario, when there is a situation to manage the funds, they take a decision based on first available options. When you take a first available option, means you have not taken understanding of a scenario analysis. You have not understood your asset liability management, but the concept is सस्ता है तो बेहतर है. In a business, सस्ता है तो बेहतर है हर बार नहीं हो सकता है. So you need to understand the things, and most of the borrowing after 1.5, 2 years goes into a problem, and technocrat owner who is expert in his market or a product or a production will start spending his time on fund planning. मीन्स सुबह 9:30 बजे से पैसा ढूंढना शुरू होगा, क्योंकि कमिटमेंट है, सप्लायर सर पे बैठा है, बैंकर ने फोन कर दिया, इंटरेस्ट सर्विस नहीं हुआ है, पैसा किसी को दोस्त से लाना पड़ेगा, किसी दोस्त को देना पड़ेगा, चेक क्लियरेंस करना पड़ेगा. मतलब सुबह 9:30 से 2-2:30 बजे तक तो ये धंधा, मतलब बंदा का efficient times goes into a stress. When the efficient goes into a stress of management fund, वो धंधा बढ़ा नहीं सकता है. So in any loan situation or a planning situation or interest rate situation, you need to consult a doctor for finance who will give you an idea by understanding your business, who should give you an idea what you should borrow, how you should borrow, it may be a higher rate of interest, but it is actually as per your business requirement. So what I suggest is we need not take all the decision on our own because of we know the everything because we are expert in our business. But this is a classic field where lot of area of understanding needs to be taken care of. And with the help of a financial consultant, financial fundraiser, or a financial advisor, we need to borrow right at a right rate with right timing and probably which meets our business requirements. Uh, I think that's all from now, from me now. Prasanna, you can share the last poll and then we can have a question answers.
Thank you everyone for participating in the last poll about solutions. The question is, which of the following option would you like to explore for better financial management? 57% say restructuring and balance transfer. 71% say diversification and cash flow management. 43% say scenario analysis and asset liability management. And 43% say advisory from financial consultant. Thank you. If you have any questions, please write in the question and answer tab in your Zoom login, or you can raise your hand. We shall activate your microphone to ask the question. We have few more minutes, so if you have any question, please ask the question in the question and answer tab or raise your hand. Yes, Mr. Manoj, you can unmute yourself and ask the question.
Yes, my question to Suresh Bhai is that uh, what's your advice that at what interval we should review all this with the financial advisor, and I mean, what is the ideal time or ideal period? I mean, it should be periodical or no? What's your advice? Because
See,
if you have done once, the business scenario or the dynamics of the business or the dynamics of the government policies changes, so at what interval we should or at what point we should consult for the realignment of the financial arrangements?
It's a very good question, Manoj bhai. Manoj, I'll take it like this. Generally, when we do business as an SME, what I've seen is people try to plan what they want to do in a year. That happens probably in the March or April month. That's where people are not having the complete data, because most of the SMEs starts running for what is their income, what is their expense in the month of August and September when the audit time is there. I personally feel that we should have a proper data of what our business is in our hand. And the one planning should be done when we do a planning for our next year's target in the month of April. Probably in the next 6 months when we plan our income tax returns, we will have an exact scenario of what interest we have paid. People adjust their incomes and other things, but interest is fixed because it is gone to a bank. So you as an individual, first of all, whatever is your in balance sheet transactions, means on the balance sheet, you need to understand the interest. That is what you need to evaluate twice. One in the month of April and the other in the month of September. Then you also need to have a clear vision, because most of the time the data submitted to the consultant is not correct. Only the owner knows what is debt. Khadda kahan tak hai. So in that situation, you need to put whatever your borrowings are there on the paper and understand the impact of it. We do not do that calculation ever. So what I suggest is, we should not be shy of writing, Mera itna loan hai, ye rate pe, ye jayega. This is my total outflow and what should I do? Generally, when we need to borrow, we think of where to borrow. We do not think how to repay, क्योंकि वो pressure होता है borrow करके कुछ transaction करने का. So we need to look at least every 6 months as a businessman what has happened. Salaried, generally, I will say they do not have major options. They should also look at twice a year and restructure their home loan and mortgage loan, because they do not have a term loan or a working capital loan, but they may go for a top up or a balance transfer and reduce their unsecured borrowing. What has happened is, let's say, I'll give you a classic example. Today, I have taken a loan and I have borrowed it from a friend for a different part of, let's say, property loan as a salaried employee. And then I will, or an office loan of couple of lakhs of rupees from the office. After 2 years, I'm still paying the higher interest rate. Then I should go back, borrow as a top-up loan, because my property value and my salary income and all will support me for up to that amount, and repay those higher pay of interest. So we need to look at generally at every 6 months, what is happening with my business, what is happening with my borrowing, and what is the market scenario. So internal, external, and personal. 3 thought process every 6 months. It's just a day's thought process, because you know your business, you know your borrowing, and you know your market. Then a consultant, and then say, these are the 3 situations, what should I do? And give the right scenario.
Got it. Thank you so much, Sunish bhai.
Thank you. Rupal, you have got 2. Rupal, you have
So
got
we
2
do have,
questions.
we do have questions in the question and answer tab.
I was just going through it. So
Okay.
Rupal, your question is, what causes interest rate increase exponentially as we have seen in previous year in India? See, historically, Rupal, you see, this is the second time you have started noticing these kind of interest rate hike. One happened in 2008 when Lehman Brothers happened, and it happened for next couple of years or more years. And this also has happened. So basically, it happens because of the market scenario. It happens because of the economic condition and government policy. In 2008, when Lehman Brothers issue happened, there were a lot of default happened, and banks have lost a lot of money, and the economy was in a bad shape. In that period, initially, to control the havoc in the market, Reserve Bank of India reduced the interest rate. So for first 6-8 months, they have given some kind of boosters, some kind of subsidies and all. That has gone into a drastic inflation in the market because everybody started getting the benefit which they never thought of. But after that, banks need to control. People went into overall expansion and all. And then the interest rate hiking cycle started, in which continued. So people with the property loan were to the level of 14.5% also, which were exorbitantly bad. This time, the situation is the government has spent a lot of money on Corona at the time of Corona and to manage the economy world over. If you see the economic condition here in India, we are still much better position compared to other economies in the world. But these are all synchronized movement. So India cannot go against the what are the movements in the economic situation across the world. So where they have to tighten the cash flow, India also has to do this. If you see USA, from 2% to 7% is the rate of interest which has increased. Here we are increased from 4 to 6.5. Means our interest rate has increased by 62%, whereas their interest rate has increased by 250% or more. So we have to see the market situation. These are the reasons where it has gone. Still, we have not grown exponentially in interest. We are still chances that we may have to go for another 2 rate hikes. Does that answer your question, Rupal? Then I can shift to the next question. Your next question is, on one hand, government has taken steps like Make in India, MSME engagement, Startup India. On the other hand, IBC law, where operational creditors who are a part of the MSME, etc., takes 90 to 100% haircut. Is the government clear on what it is doing? See, I think yes. You see, government has to look at from both the point. Those who are good people, those who want to grow, and those who have a chance to grow, government needs to encourage them, give them an environment, give them and support so that things develops. In this situation, there are chances that there will be some success, some failure. To take care of the failure, they need to understand the reasons for failure. There are through IBC law where they take the haircut and do the adjustments. Most of the time, it's a calculated decision that whatever you get, you are getting it. But things doesn't stop there. In spite of taking the haircut, government is still active in 2 ways. They have developed a legal system to recover the money from other possible sources from these people. At the same time, with the help of IBC law, they have made a wall so that these defaulters who have taken the government, public, and banks' money through this system, they do not enter the system again to do the things repeatedly. Means there are still ways people come back and do these, they are serial offenders, but government is taking steps that they do not come back. And I think they are doing whatever they are doing is right. They, for wrongdoing of somebody, they cannot stop the others in their aspiration, growth, and possible growth probabilities. Any other questions? I think, Prasanna, no more questions.
So, can I conclude the session, sir?
Yeah, please.
Thank you, sir, for such a detailed and knowledgeable session. The session leaves us all with plenty of ideas, information, statistics, and vision to reflect upon. On behalf of Fund Flow team, United SMEs team, I thank everyone for attending this session today. Please fill the survey form which you will get at the end of the session to give us your valuable feedback. Thank you again.
Thank you, Prasanna. And thank you, United SME, for giving me an opportunity to present my idea. Thank you.